Hello and welcome to today's Talk Economics. COVID-19 has wreaked havoc to the economy around the world, including New Zealand. So for today, we're going to tell you 8 things that it has caused trouble in New Zealand, and followed by 8 things how we're going to overcome this. Since New Zealand entered into lockdown 6 weeks ago, over $10 billion has already been wiped out in the first 4 weeks. And another $5 billion have been wiped out in the last 2 weeks also. Right, so that's 2 things that's against us around this COVID-19. Number 3, even if we enter into the lowest alert level in New Zealand, which is level 1, just for 12 months, that's what's expected until the vaccine might appear. Even just that would be a bigger economic hit than the global financial crisis of 2018. That's just to put things into perspective here. Number 4, one industry that's desperate to see some restriction lifted are things like performing arts and venues. So think about concert, cinemas, amusement park. Those are worth over 2.3 billion to the New Zealand economy every year. And now they're pretty much just closed, right? Number 5, jobs are already being lost. And as I'm going to put a figure here to show you the current situation. So just in this last 3 months, right, you can see the number of people receiving job support has gone up from the normally around 120,000 to about 150,000 just within a month or two. It jumped more than 200,000. That's a big jump, right? And according to our Prime Minister, Jacinda Ardern, things are going to get a lot worse before it get better. Right? Number 6, the airlines and travel restrictions has meant that over 90% of flights has been cancelled in and around New Zealand and even out of New Zealand for the last 1 month and a half. And to make things even worse is on number 7. This reduction of travel is causing hotel rooms and tourist spots to have more than halved in price, right? And lastly, it had to whack a big trouble for people's confidence in spending. People have reduced their spending on a lot of non-essential items immediately. Right, the consumables have gone up. Like people have been buying more food from the supermarket, making the food themselves. But if you look at the category that's severely impacted, that's mostly around hospitality, appeals, and fuel. They have reduced it by 20 to 40% just within a month, right? And that was in March. April was even worse. So to put that in perspective, right? Here is the 3 categories that's probably hit the hardest, right? And lockdown really occurred somewhere at near the end of March, right? So really, all those numbers here, we extrapolated into April, right? They've been reduced somewhere around, say, 60 to 80%, right? Reduction, right? that's kind of how bad this situation is, right? Okay. All right. Let's have a look on the bright side as well, right? There's like a really fun joke, an interesting joke on economists. It says they have predicted 11 of the last 3 recessions, right? So for them, they kind of predict a lot of extremes ups and extreme downs. And right now, they seem to be falling over themselves. They're painting a very bleak picture about the future for the economy in New Zealand and globally, right? But having said that, they've been wrong more often than they're right, right? And when you look at the economic situation, you can't look at what people say. You gotta look at what people do, right? What do they? How do they behave? How does the market behave in this? All right, so let's talk about 8 things that would help New Zealand economically getting out of this situation, right? So number 1, the government had a huge fiscal firepower here, right? They have been saving money in the last few financial years to beef up their kind of the savings, right? They haven't increased benefit much at all. They haven't cut taxes, even though they've been getting a lot of surpluses in the last few years, right? So those would definitely help New Zealand through this COVID-19 situation. Number 2, the Reserve Bank of New Zealand will have made statements where they will ensure market functionality and lending would continue, right? To further illustrate this point, it's good to kind of have a look at this graph here. The official cash rate of New Zealand has been going down by a lot. Within the last 2 years, have gone from 1.75% to 0.25%, just within the last 2 years. Mortgages have gone down by at least 1% in kind of mortgage rates in the last 2 years, right? So a huge kind of support to make sure that gets supported, right? Number 3, the Reserve Bank have recently relaxed the loan-to-value ratio for residential housing, right? You have removed the 20% loan-to-value ratio for kind of owner-occupied housing, and they also removed the 30% loan-to-value ratio for investor housing, right? Some critics might say, okay, that might enable kind of allow irresponsible lending, but at this current time, what's more likely to happen is because of fear, less than adequate lending might happen. So this removing of loan-to-value ratio has greatly enabled accessibility in some extent towards people buying houses, right? So we'll support those market here. And number 4, the financial market, the share market of New Zealand has been giving very clear signals than what the economists are saying, right? This has been reflected in the combined actions of actual investors, the people who put money in things like share markets and bonds, right? The leading kind of indicator about New Zealand economy is the index 50, where it encompasses the 50 largest shares in New Zealand. This is a graph from beginning of the year until now, right? So let's have a look at this one. So here is a graph of the leading New Zealand 50 indices. As you can see, when the COVID-19 crisis came along, it dipped quite a bit from the high of around 12,000 points to a low about 8,500 points, which is nearly it's about 30% decrease. But it rebounded relatively quickly. Now we're within 10 or 15% of the previous highs that we have. So you can see the stock market overall had recovered most of its downfalls and is looking forward to a decent recovery here. Okay, number 5. In New Zealand, in about 20 years ago, the KiwiSaver scheme was launched, and together with the New Zealand Super Fund, the ACC, a lot of like Maori Indigenous Iwi Fund, and so far, the total amount of investments has gone from $40 billion in 10 years ago to nearly 150 billion today. And that figure is expected to go to 350 billion by 2030. This year-on-year increase, right, is equivalent to having a COVID-19 bailout every year, right? That's how much money is being saved and invested by New Zealanders as overall, right? That's a huge amount. Okay, number 6. New Zealand as a country has 2 political parties, but overall they're not on the extreme side of things. Either we have the Labour, who's on the center left, and we have the National, who is on the center right. Center being the key word here. So overall, we're well governed. Most of our politicians from all parties have done relatively a good job. There's no extreme policies as such, even though there's some imperfections and so on. And hopefully lessons have been learned. And the question is, right, if you look at country as a whole, like New Zealand, right, we have one of the highest kind of satisfactions with our government. I think over 75% of people are relatively satisfied with the government overall. And that can't be said to a lot of the politicians in other countries, right? So, and in fact, there was a lot of kind of common joke or commentaries where other countries want to have the leadership of New Zealand, right? Okay, number 7. Internationally, we are doing just fine, right? We're basically smiling the roses right now. New Zealand is becoming more and more of a competitive place to buy stuff and to trade, to travel, and to do business with. It was named number 1 on the list of easiness to do business. And as this kind of situation unfolds, we are getting into even a better situation than it ever was before, right? Okay, finally, we should never underestimate the human ingenuity in overcoming problems and difficulties. It's often through problems and difficulties we come up with solutions, technology, and innovation that can help us grow even faster into the future, right? I will leave you with one graph to kind of just demonstrate how far New Zealand economy have come along since the 1970s, and we'll compare that globally as well. So here's a graph here. It shows the growth of $1,000 invested in 1970, about 50 years ago, to today, right? That's after taxes. If you assume you just reinvest the dividend here. So you can see in the last 50 years that $1,000 invested in New Zealand share market have gone up to $120,000, compared to globally as a whole have already gone up to 60,000. So over the last 50 years, New Zealand share market has outperformed the global indices by a factor of 100% here. If you're interested to learn how to invest in some shares, I'll leave a link down below. And also, if you sign up within the next couple months, you get $10 of free money with the shares trading account. So do follow the link down below. And thanks for watching. And make sure you smash the like button, help the YouTube algorithm. And please do subscribe. And I'll see you guys next time.